You're watching Mirror 7 News. Stay informed, stay ahead for more news.
The cryptocurrency world just went through one of its most chaotic days in recent memory. In what's being called a crypto bloodbath, billions of dollars vanished from the market in a matter of hours, leaving traders and investors reeling. It all unfolded following the U.S. government's announcement of new tariffs on Chinese tech imports, a move that sent shockwaves through both traditional and digital markets. Bitcoin, the biggest name in crypto, dropped below $110,000, and other major digital currencies like Ethereum plummeted by more than 20% almost instantly. The fall wasn't gradual. It was a steep, heart-stopping drop that triggered panic across exchanges. Traders who had borrowed heavily to bet on rising prices were forced to sell off, and that sparked a domino effect of automatic liquidations. Within hours, billions in leveraged positions had evaporated. Joshua Duckett, director of investigations at a crypto forensic firm, explained the scale of the losses, saying that while most investors only risk what they can afford to lose, the situation becomes dangerous when leverage, essentially borrowed money, enters the picture. People can borrow up to 100 times their actual holdings in crypto, he said. When the market suddenly moves the other way, those positions get wiped out instantly, and that creates a cascading effect. This chain reaction was exactly what played out on Saturday. Once a few major positions were liquidated, it set off a spiral of forced selling across the market. Every downward tick triggered more liquidations, which pushed prices even lower. Duckett described it as a classic example of how leverage can amplify both gains and losses. Except this time, it was all downside. Adding to the chaos was the fact that crypto markets never close. The stock market might have reacted badly, Duckett noted, but the crypto market reacts harder because it's 24/7. There's no cooling off period. The constant activity meant that the sell-off continued non-stop until enough buyers stepped back in to stabilize things. Despite the panic, there's a hint of optimism. By the end of the day, signs of recovery had started to appear. It seems to have stabilized for now, Duckett said. We're in a rebound to stable position. Tomorrow is a new day. The episode serves as a sharp reminder of the golden rule in investing. Never put in more than you can afford to lose. In the unpredictable world of digital assets, that advice rings truer than ever. Stay subscribed for more videos.